Welcome to the Penny Stock and Cryptocurrency Survival Guide. Before we get into the class itself, I want to give you a little bit of context. The class I put together several years ago, but the key thing here is that the class is about emotions and psychology. And with emotions and psychology, because we're human beings, they've always been around and they will always be around. So what you learn about has been valuable, still is valuable, and will be valuable in the future because we're humans. We're always going to have anger, greed, overconfidence, sorrow, freaking out. All those things have always been around and will always be around. And the key is when you understand those dynamics, as cruel and mean as it sounds, you can leverage those dynamics against other people. If you understand how other people are feeling, how other people are viewing different circumstances, then like I said, you can leverage that to put profit in your pocket. Yes, that sounds mean, but that's how the financial markets work. It's understanding how other people are feeling and believing and then using that to your advantage. The other note is that this course is based around penny stocks, but please realize this for you crypto traders. Anytime I say the word penny stock, you realize that you can and should replace that with a cryptocurrency. Anytime I'm talking about an exact penny stock, please realize you can and should insert in any sort of coin that you may be looking at, because the emotions and psychology is a perfect parallel between penny stocks and cryptocurrency markets. And it's a way that you need to go into surviving penny stock trading, crypto trading, or maybe you're gonna do both, but you better understand how what I call the wilderness works, because if you can understand the wilderness, you're gonna give yourself a way better opportunity to make money as a whole. So let's go to my desktop and let's get into the class. Welcome back to part 2 of our core concepts. Let's keep on moving through. So shorting equals bad policy. First off, I'm only talking about penny stocks. I absolutely love to short big board stocks. I think shorting is something that if you want to be a true well-rounded trader, you got to be able to short, because you got to be able to make monies from both sides of the market. However, when it comes to penny stocks, I think it's a totally bad policy. So let's first address a very common misconception. And the difference is very subtle, but there is a huge difference. And that is that all penny stocks are garbage and pump and dumps, so they will all fall in price. Therefore, they are great for shorting. You may be thinking, well, what you just said makes perfect sense to me. That actually, yeah, I want to start to short penny stocks. So let's just not even factor in the fact that commissions on shorting penny stocks can be extremely large and cumbersome. Let's just ignore all that. The reason why I personally think shorting penny stocks is the dumbest thing in the world is this, and we're going to cover that next. But I think shorting penny stocks, it is stupid. And that revolves around the subtle difference. Now, the whole problem with that statement that I gave you is it makes an assumption. And this assumption, although small, is very, very critical. And that is that you're actually shorting in the right location. I mean, just because they all go down and they're all pieces of garbage and all that stuff, which I agree with, you still have to be able to short in the right location. And to me, it's all about math. So let's just look at some math. Remember, from the shorting side, you make money when stocks go down. So let me ask you, how far down can a stock go? I just gave away the answer. What's the lowest a stock can ever go? The answer is 0. Therefore, the best you could ever do is 99.9% on a penny stock if you're shorting it. That's the best you can do. Now, the amount you can lose, though, is unlimited. Yes, you read that right. If you're not familiar with shorting, you need to understand that in the world of shorting stocks, losses can theoretically be unlimited. Now, why is that? Because a stock can theoretically keep on going and going and going. When it's going down, the least it can drop is to value of nothing, which is 0. However, going to the upside, your loss is going to be unlimited. Because remember, with shorting, if the price goes higher, you are losing money. So keep that in mind, and then we're going to look at this equation here. So the best you can do is gain 99.9%. The worst you can do is potentially have massive unlimited losses. To me, that seems a little unbalanced. So again, does that sound like a good, attractive, solid, smart, risk versus reward? Sure, penny stocks are garbage in fall, but while not easy, it's not uncommon to see them move over 100%. And again, keep in mind, the best you can do, the absolute best, if you're flawless, if you short at the perfect spot and it goes all the way down to 0, the best you can do is 99.9%. However, it's not uncommon to see penny stocks move hundreds of percents all the time. Now, like I said, I don't want to come across like I'm saying, and it's easy to get these 100% movers, but point being, if you've been around the market for a while, you've seen stocks that have moved over 100% and done multiple hundreds of percents. So it all goes back to this. And just a reminder again, shorts make money when the price goes down. The higher stock goes though, the more money they lose. And we need to keep that in mind as we look at this next slide. Yes, you are seeing this right. This is, if you've been around around a while, LEXG, maybe that sounds familiar to you, but this was a promotion. And the promotion, it started off down here when shares were at $1.85. Remember, we are defining penny stocks as anything less than $5. But it started down here at $1.85, and then it went as high, and this was over the course of a couple months, as $10.50. And this is one that you could short. So yes, and now, LEXG, I'm pretty sure that trades for less than a nickel. Not the point. Yes, it was a piece of garbage. Yes, it was trash. This was a promotion. Yes, there was a bunch of shares that needed to be sold. However, what happens if you shorted right there? What happens if you shorted right here? What happens if you shorted right here? What happens if you shorted right here? To me, I mean, this is an $1.85 up to $10. I mean, that's like wiping out your entire portfolio in losses. It just doesn't make any sense. I mean, this is just a massive move, and this is one where, to me, doesn't make sense. And remember, the whole liquidity thing, that's the same exact for the shorts. If the shorts get into something that isn't very liquid, and then all of a sudden they need to get out, their stop loss is triggered. Remember that whole part in the previous presentation. That not only pertains to people that are doing it traditionally, meaning buying and then selling high, that pertains to shorts too. So they need to be very careful about liquidity, and if they're in a situation where liquidity all of a sudden isn't in their favor, things can go bad for them very quick. That's why I don't mind shorting big boards, because liquidity, like I said, it all boils back down to liquidity. On the big boards, if I'm wrong on a short and it starts to go against me, boom, I'm out. That's fine, because there's plenty of liquidity. But in penny stocks, when liquidity can be a major concern, yet another reason why the risk versus reward and the whole shorting thing, it makes no sense. Yeah, it makes a great sales pitch, and I'll just leave it at that. Yeah, shorting penny stocks makes a great sales pitch because, of course, you can say they're all garbage and they all go down. But yeah, trying to time when they're going to go down, when you have potential moves like this out there, I'll just leave it at that. It makes a great sales pitch, but when you really break down the sales pitch and how to actually make money with shorting, it's just a terrible, terrible, terrible risk versus reward. So I'll just leave it at that. The next core concept, get out if you're not really a lovey-dovey person, get ready to get lovey-dovey, because we need to learn how to embrace the shorts. And really, truly, one of my biggest pet peeves in the entire penny stock wilderness is people that start going like this. It is going down because of the shorts, the typical pumper nonsense. It is the shorts' fault, always blaming the shorts. This should be illegal, shorts are unethical, blah, 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 blah. The shorts have such a bad name. Everybody blames the shorts, but it's easy to. And it's just, I can't stand it. Everybody's always blaming the shorts. So I totally understand, don't complain about something unless you have justification. Kind of like if you complain about a problem, you better have a solution. Well, I have justification for why I feel this way and why it annoys me and why, quite frankly, it's just a total misconception and flat out wrong, because we should love the shorts, and we're going to get into, why that is. So quick review, we've been over that, but I just want to really pound that in. A short means you sell first. But when it's time to convert their shares back to cash, so again, that's, the whole liquidity thing. So when it's time to convert those back to cash, they must buy. So they sell first and then they buy second. Sell first, buy second. Buy second. Okay, keep that in mind. Did I mention that shorts need to buy? Okay, let's keep moving forward. So we're just going to do some, very basic stocks 101, ABCs, count to 10. So when a sell happens, the price A or B. It's either going to stay the same, and that implies that the selling is done at the ask, or it's going to go down, and that implies that the selling is being done on the bid. So because the first thing that a short does is sell, and there is a possibility if they do it on the bid, it can put the price down, you can see why shorts are an easy target. I mean, by definition, they cause the price to go down if they hit the bid, so therefore it's always their fault. False. This is another penny stock misconception. They do not cause anything. Bad fundamentals are what cause stocks to go down. Do shorts think that a price will go down? Absolutely. But do they cause it to go down? No. The Billy Bobs of the world think it's going to go down, or cause it to go down. The overbloated financials, the just anything in the course. I mean, we've been through it all. Those are the things that cause a stock to go down. Now, a short, they think it's going to go down, absolutely. But are they the ones that are causing it? No, because remember, let's just keep on moving. Selling is only the first half of the equation. They then have to do something else, and it starts with a B, but let's just keep on moving. So let's hop back into elementary school here, Stocks 101. So when a buy happens, what does the price do? A price is either going to stay the same, and that's when people are buying on the bid, so that's providing support, or it's going to go up. That's when people are buying at the ask. So the people that are always blaming the shorts, sometimes they always forget to mention that every short becomes a buyer at some point. And not only do they become a buyer, this is the best part, they become a guaranteed buyer. Guaranteed they're going to be buying. So, if the belief in something is strong, then I want to be a part of something where there are as many guaranteed buyers as possible a part of it. I mean, think about that. Guaranteed. Remember the process. Yeah, they sell first, but if the company's doing anything decent, if the promoters know what they're doing, then they're bringing in all these guaranteed buyers, and we'll get to that here in just a second. But I want you to remember that. That's why we have to hug them. Hey, well, come on, guaranteed buyers. I'll take all the guaranteed buyers that I can get. I mean, because if that belief is strong, if the Kool-Aid is running, then you know what? The more guaranteed buyers, the better. We're going to come back to that whole guaranteed buyer thing later on, but let's talk about manipulation. What do we do about manipulation? This is another famous excuse, and potentially the most famous in the entire wilderness. The MMs are manipulating the stock. Let's do a quick little review. Remember, we are the MM's boss. We tell the market makers what to do. We tell them how many shares we want, either to bought or sold or whatever, and they do what we tell them to do because they get a commission from that. Now, MMs are not people. They are lines of computer code and algorithms that are simply a portion of the vast electronic market. It's all computers. If you're not aware, newsflash, it's not like it was back in the 60s and 70s with people running around waving sheets of paper. Yeah, that makes a good photo op, but at this point in time, everything is computers, and that pertains to the the penny market too. You tell E-Trade that you want to go and buy penny stock, and their little E-Trade market maker, that's what they're going to go and do. A lot of people, they get the impression that there's some evil guy sitting in his cubicle laughing, the evil moo-ha-ha-ha, as he manipulates the stock. And that's what the hypnotizing pumpers will tell you. That's what they want you to believe. But it's nothing like that. Manipulation is just a total fabrication. It's just an excuse that the hypnotizing pumpers to use to cover up what's really going on, and for them to get rid of their shares before everybody realizes what's really going on, which is always going to be the dilution and all that garbage. However, I am not an egomaniac. I'm not somebody that claims to know it all. I've been wrong before, so let's just make that assumption right now and say that I am wrong. And let's say that MMs are indeed people that sit in a cubicle with an evil laugh who manipulate penny stocks. Right here. Let's say that this is truly what market makers are right there. Who cares? Why do we care? It doesn't matter. Are we here to trade stocks, or are we here to file reports with the SEC about what may or may not be true? I don't know about you, but I'm here to trade stocks, make money. I'm not here to, fill out some report form, send the SEC some email. These market makers are manipulating the stock, blah, blah, blah. Who cares? It doesn't matter. Whether I'm right or wrong about market makers and all this manipulation, it does not matter. Who cares? Hopefully you know that by now. What matters? Say it with me. Belief. And again, let's say that manipulation is taking place. I mean, what are you going to do about it? Yeah, you can waste your time and file the report with the SEC. Yeah, I'm sure they're really going to be on top of that. But by this time, like I said, and I'm going to repeat it again because I'm trying to annoy you and I want you finishing my sentences, and hopefully you are, the only thing we care about is belief. So now the question becomes, and this is the question that we actually care about, is this manipulation, and that's assuming, of course, that manipulation is actually taking place. Is the manipulation hurting belief? That's the only thing we care about. If it is happening, is it hurting belief? If it is hurting, and you see that belief is starting to get weak, then it's time to move on as a trader. Remember, we're traders. We're not, you know, the watchdogs that need to fill out some report. Just move on and find something else where manipulation either is in your favor or isn't hurting the stock. But don't spend too much time sitting there and complain, or don't spend any time complaining about it. Who really cares? All we care about is belief. Now, if some sort of manipulation is affecting the belief, then fine. But whether or not it's truly manipulation or the CEO selling shares, doesn't matter. I just want to know what's going on with belief. How's the Kool-Aid situation? How's that gauge on the Kool-Aid? Now, for manipulation, we actually like it for two reasons. This may sound totally foreign to you, but believe it or not, as bow hunters, we like manipulation. First, it gives the pumpers something to use as an excuse on why the price is falling. You know, sometimes we may need the price to stay up, or somebody, I mean, we love those hypnotizing pumpers and pumpers in general. So this is, I mean, it's a classic excuse, but it's a good one. I mean, it's like a Kool-Aid shield against dilution. And, you know, in fact, sometimes it can make the Kool-Aid stronger. What do I mean by that? Again, go back to the case studies, and if you read through message boards, you'll see this develop, but it's not uncommon at all to see the longs unite and bond under the flag of, we must crush the shorts and manipulators. They start waving that flag, and people start buying more shares, and it's just a Kool-Aid frenzy. People bond, people form relationships because they have a common ground. Their common ground is, we've got to crush these manipulators, crush these shorts, let's all buy more shares. And we're sitting back as bow hunters looking through our binoculars. That sounds good to us. You keep on buying those shares if you want to try to push up the price more or support the price or whatever. If they want to support the Kool-Aid and keep the Kool-Aid flowing, that's great, and that's what manipulation does. It's great as an excuse, great as a Kool-Aid buffer, and sometimes it's like a little Kool-Aid potion that makes it even stronger. And second, the true manipulation is well-intended. So let's talk about this. Now, well-intended manipulation. This is what well-intentioned manipulation leads to, and this is, hopefully you see this, LEXG. Remember what I said about shorts and why we should love them? They are what? Blank buyers, guaranteed buyers. So this is what happened with this. I mean, this is well documented if you go back and read about this one. But what manipulation does, I'm not saying any of this is legal. So I'm not advocating that anybody should sign up and start to do this, but promoters first off, and when I say promoters, I'm talking about big league ones. The big league ones are the people that take on these dollar stocks and above. I'm not talking about the me of the world, that's doing a video chart for a few bucks on some obscure, not necessarily obscure, but just some small case penny stock. It's not like this. These are the big boys. These are the people that are being paid lots of money, that own shares, and they are in the big leagues. They are the big boys of the promoting game. They don't like shorts. They hate shorts, but they're not dummies. They know how to utilize shorts, and they know that the people that are shorting these things, they can set what are called short traps, and a short trap is just right here. So let's break down our LEXG chart even more. So we've already talked about how it first started getting promoted at 185, price came up, and then it just started going sideways, and look how long it went sideways. This right here is a short trap. Those promoters know exactly what they're doing. They are letting the shorts think that this thing is over. A top is starting to form. The belief and all the Kool-Aid is starting to get diluted, and it's about to go down. So the shorts start to form a position, and then all of a sudden they manipulate it, and boom, up it goes. That's going to cause some shorts to start to cover. Other ones are going to say, okay, here's the final top. That was a crazy high move, so I'm going to short some more. And I'm going to bring up my average cost. So now when it finally does collapse, because this Kool-Aid is for sure, this was a crazy move. At this time it was $1.85. Now it's way up here. This is over. But nope, short trap number 2 of manipulation, and bam, this is what is known as a short squeeze. Remember all those shorts that are so evil that we're selling first? Well, if they want out, they got to buy, and a guaranteed buyers cause this. And then when you put guaranteed buyers alongside people like us that just want to get in and buy, now they're competing against us to buy shares, and they are getting squeezed. That is a short squeeze, when a short needs to cover because they are losing money and they just want out. However, because now there's momentum, now there's all sorts of Kool-Aid flowing, there's all sorts of belief, then now they're having trouble buying because there's all these other people that want to buy, but they need to buy because they're losing money. And you get this, and boom, short squeeze, and 1050. Now, that remember the general concept about shorting, and You know, shorting makes a lot of sense because everything is garbage. Well, yeah, until you get squeezed. Now, if you short it up there, perfect. But still, the best you're ever going to do is 100%. If somebody, let's just take the math. Let's say somebody shorted at $2. You know, that's over 100%. I mean, that's like their portfolio gone, because they would have lost theoretically over 100%. You know, there's safeguards in place that brokers have where they'll come in and liquidate your portfolio for you, but that's outside of the course. Just know that this core concept, this is why we love shorts, and this is why manipulation isn't bad, because usually when manipulation is going on, it's because the big promoters in the big league are sitting there setting up the shorts so that you can get a nice move. But again, doesn't matter, who cares? Is the belief, is the Kool-Aid running strong? You know, if manipulation is gonna help the Kool-Aid, great. If manipulation is hurting the Kool-Aid, not good. At the end of the day though, we're just looking at that Kool-Aid gauge. Here's another example of exactly that, you know, the manipulation. I actually wrote a blog article on this, so that's where this picture comes from. But this was LOTE, and you can see here, again, you know, for a long time, volume started to pick up, and this was, you know, this is big league promoters. This isn't, you know, the little, just know that this is big league stuff here. But this is what we're looking for. So it popped up here, hovering around, you know, $1 to $2, and they're just starting, you know, to get things in. And then look at this day right here. So that day, and then look at all that volume. It makes it look like, you know, the price had this nice little move up here, so this is kind of a little short trap. But then this day is where the manipulators came in, made it seem like, uh-oh, you know, the short should be jumping in. Those shorts came in. But remember, if the company is worth anything, if the promoters are worth anything, then, you know, it's nothing to worry about. They drew in all these guaranteed buyers, and then look at this. Made its first run up here. Now, maybe some shorters didn't get in here, but they're like, aha, look at this, it's falling. There's the big gain. You know, it is a good sales pitch, you know, short because penny stocks are garbage and they're all promoted and manipulated. I agree, but when they're manipulated like this, and this is the case where I think they are mainly always manipulated, then look at that second short trap, boom. And at the time of this post, this one was high as $17.34. And keep in mind, it was down, it started less than $2. And now if you were to look at LOT, I believe this one's trading for I think like 2 cents right now. Don't quote me on that, but I know it's a lot less. So yes, this was a total pump and dump. It was a total piece of garbage. The company's, you know, a joke, all that stuff. But I mean, shorting, I mean, to risk getting stuck in a short squeeze like this in order to make, you know, at best 100%, that to me, the risk versus reward is so tilted. And then, you know, back to manipulation, if it is going on, you know, I'm all for manipulation if it leads to stuff like this. I mean, but at the end of the day, who cares about manipulation? I just want to know, where's the Kool-Aid gauge at? You know, how strong or weak is the current level of belief? For this next concept here, buy the rumor, sell the news. Perhaps you've seen it. If you haven't, I mean, this is just textbook psychology. You know, the pros of emotion, which you are now becoming. You know, exploit these human emotions over and over again. You know, it's not really rocket science when you stop to think about it, but it happens all the time, not only in the penny stock market, but, you know, in you know, the big board markets too. So this is certainly a concept that translates not only from the penny stock wilderness, but also into big board trading too. So let's look at some definitions first. First, we need to define the rumor. Hopefully you understand what buy and sell means by this point. So the rumor is a forward-looking event. Most common, this is going to be some sort of news release or SEC filing, you know, just some sort of event. And remember, the main communication is through news releases, so that's what it's going to be. Now, the news is when, assuming it is true, I mean, think back to my journey. If you watch that video, you know, all that was supposed to take place, and the when, you know, it never happened when it was supposed to. But let's assume that the when does happen, that's the event. So the news is when the event occurs that everybody's been talking about. So now let's just stop and think about the emotions here. You know, people buy because of hopes and possibilities. We talked about this in the penny stock cycle, but it really is true. However, not nearly many as people buy when the event happens. And I think the best way to look at it is, you know, I would argue that for many, the best part about New Year's, so think about, you know, New Year's Eve, New Year's, that time of year is the time leading up to it. I mean, think about it. You have Christmas in there. You have parties to go to. You have all sorts of good food. You know, the Christmas music's on the radio. It's, Depending on where you live in the world, maybe there's some nice snow on the ground and you're building snowmen and going sledding, all that stuff. I mean, there's all sorts of excitement leading up to New Year's, and that's how it works within the stock market. Again, I'm saying stock market because this goes from big boards all the way down to penny stocks. People love things leading up. They love the hopes. They love the possibilities. Everything that leads up to the event is really where all the fun and excitement is. So for this, we're going to do another little case study here. So this poster stopped by my message board and talking about MRIB. Now look at these keywords here. License approval imminent, meaning it has not happened, but it's going to be happening anytime. It is coming. Down here, another one from the same poster. So this person is obviously, you know, a hypnotizing pumper, probably a little bit of a loudmouth pumper too, as you can see, all bold, all underlined. But look at this, major PR, which means press release. So major news to be announced, which means obviously it has not, but hey, in the future it's coming. So, and you know, this week, whatever, license approval. And so in this penny stock cycle, you know, the big thing that they're being defined as the pumpers. So the pumpers, what they're using to their leverage is this license approval. I don't know what this license approval is. I don't care. But that's what they're leveraging right now. This license approval is coming to be announced. It's imminent. It's coming, but it hasn't happened yet. That's what they're doing. That's the rumor. That's the catalyst, you know, and that's what everybody's focused on. So you can see here, it started at, you know, March 5th. And then it kept going on March 10th, you know, this license approval. It's coming. It's coming. So now let's go take a look at Yahoo Finance, see what's going on with things. So here we are at Yahoo Finance. And what I want to first point out, just looking here, that finds pretty comical is, you know, you look down here at the dates. Maybe you can't see them, but here you have a news release October 29th. January 6th. So that there's a big difference there in time period. After January 6th, nothing until January 10th. So another one little here, January 14th. So they ramp things up a little bit. January 31st, January 31st. So they're going through this little stage. Can you see what's going on? This company seems to, it's almost like you know when they're trying to sell shares, because all of a sudden they start releasing all these press releases. Remember back to the penny stock cycle, behind closed doors, that strategic planning that needs to take place? It almost looks like there's some strategic planning going on with the dates on these press releases. Anyways, so you have January 31st, January 37th, and then 31st, and then bam, nothing. January 31st, and then all of a sudden, boom, March 7th, it pops back up again. And then March 14th, there is the news that, you know, that one person has been talking about. It's finally hit the wires. So let's go see what happened with that. Actually, let's, out of curiosity, initiate distribution for retail sales. You know, who even cares? It's pure garbage. So sorry to waste your time with this. Now remember, that news release came out on March 14th. So some people in my chat room were talking about it, and this is what I said. You know, you can see right here. This is why I love my chat room, because it's got a function where you can just go back and look in the archive. So you can see right there, and in fact, it even tells me what time I said, at 8:47 a.m. Eastern. MRIB, there has been a ton of rumor of news, so my guess, stock goes down today. People have been buying the rumor. Now it is time to sell the news. So how did this all turn out? Did humans act in a predictable way? Well, let's see. Well, let's go through the history of things. So remember that first post that showed up with the guy, you know, license approval is imminent, it's coming. Then it came back on the 10th again with, you know, news, there's going to be a press release, it's coming any time now. Well, look what's happening with the price during this time. Here is the rumor stage when everybody's talking about this forward-looking event. Again, the event is going to always be different from penny stock to penny stock. Point being, there is an event, there is a rumor, there is some sort of catalyst that everybody's talking about that's going to be coming. And the rumor, maybe it's hard to see, but I want to make this the color gold, because the rumor is where the gold's at. This is where the profit's at. When everybody's speculating, that's the good stuff. And then you can see right here, when that news release did come out, and then I said in the chat room, my guess is it's going down because it's just going to be a classic buy the rumor, sell the news. Sure enough, look at that. Dropped that day, took a beating, did recover a little bit, but now you can see the price is back down to actually below where it was. So maybe there was another little news thing here. This was kind of a last gasp of Kool-Aid drinkers, and now it's heading back down. But regardless, you can see it played out perfectly. And again, this stage right here, where it went down. This is when the news came out. And going back to that example, you know, the news is New Year's Eve. Is it exciting? Yes, it's exciting, but now there's nothing to look forward to. Everything's over, or all this speculation is now over. What's there to look forward to? Like I said, maybe there is a little blip of maybe some more news or something like that. Doesn't really matter, because as you can see, the price at this point has now dropped back down here. But, you know, just nailed it. And it, you know, it was a great trade. Now, have I said anywhere that anything that has a bunch of rumors out there and speculation should be avoided? I have not said that at all. What I'm saying is this is where the money's made. This is where the gold mine is at, right here, during the rumor stage, during all that anticipation. That's when you make money. When the news comes, this is where all the people are getting out, you know, the professionals, the bow hunters like us, selling into, you know, all the strength and just unloading their shares there, because they knew that, well, at this point, the speculation, all that has happened. So now what's going to go on? So fell down, very predictable, not because I'm a genius, just because it's basic human emotion. People like hope, people like possibilities, people like everything that leads up to New Year's Eve and, you know, the fun New Year's Eve party watching the ball drop. For our final concept, this is a big one. I just want to start off with asking you a question. Do you struggle with always selling too soon? If you answered yes, then good job. Nice work. You're going to do very well in your trading career, especially in penny stocks, because I've said it before and I'll say it again. I've never met a trader who's gone broke by selling too soon, especially in penny stocks. Wait, so you're telling me that selling too soon is actually a good thing in the penny stock wilderness? That is exactly what I'm telling you. Remember, the stock you are trading is like a big cruise ship. Here we go. We're going into another analogy here. If you haven't figured out, I love my analogies. Now, this cruise ship, it's got all sorts of great food. For those of you that have been on cruises, you can probably relate. Well, hopefully you had a good experience. But it's got great food, it's got great entertainment, and anything else you can imagine, including a big water slide. Get your game face on. This thing has a water slide. You know, buckle up. The point being, this cruise ship is something that you don't ever want to leave. When your stock just keeps going up and up and up, you really want to just take the ride for all it's worth. And that's what a lot of people do. I don't blame you. I mean, everybody's having a fun time on the cruise ship. Party time, great food, entertainment. You want to stay on there and take the ride for every little bit of profitability that it's worth. The problem with penny stocks, as you now have learned, comes with two core concepts. The two issues being icebergs and lifeboats. Two critical areas in the penny stock wilderness when you're on this penny stock cruise. Icebergs, penny stocks are trash, and at some point, they're going to hit an iceberg and the ship is going to sink. I've said enough about that. Let's just keep on moving on. Lifeboats. This goes back to the liquidity issues. When the ship starts to sink, it can be hard to find a seat in a lifeboat. Mass pandemonium, everybody's panicking. Step 10 in the penny stock cycle is going on. Dead bodies. I mean, it can be hard to find the seat in the lifeboat when the ship already starts to sink. But it's much easier to exit this cruise ship when everything is going well and the lifeboat seats are wide open. So just stay in that frame of mind. When the ship starts to sink, I'm not saying that you're not going to be able to find a seat on the lifeboat, but you may not be able to get the best seat, or you may not be able to find a seat at all. And that's where the big problems come in at. So here's my beautiful thing of art. Let's go through the process and how it all works in terms of why you want to always be selling too soon. So first thing, you board on the cruise ship. And I like this picture because the cruise ship, if you can't tell, it's kind of rinkety-dinkety, but that's how it is with penny stocks. When you're getting in, you're kind of like, I hope this thing floats. I hope it's going to turn into a nice journey. So you have all these people piling in. That's when you're buying your shares, and you know, it's a penny stock, so you know, let's see what happens. However, you then embark on the journey on the Sea of Kool-Aid right here. I wish I was looking for a picture with like red water. I just couldn't find it. So just imagine, you know, this is all red, or we'll say this is just blue Kool-Aid. Kool-Aid comes in all different colors. So this is the Sea of Kool-Aid. This is where your journey begins. And all of a sudden, this is where you're wanting to go. This is where everybody's talking about land. You want to get to the other side of the trip, get back to land so you can port, so you can, you know, pull into the station and get off the ship. And this would imply that, you know, the stock that you've gotten onto, the ship, it turns into a huge successful company and it's in the big leagues. It's getting uplisted, all this good stuff, massive amounts of profit, not revenue. They have all this profit. It's a legit company. I mean, they make it to the big leagues. That's what this land represents over here. This is where the cruise ship's headed, and that's where a lot of people think the cruise ship is actually going to make it to. But we know much better than that that's just not going to happen, because this cruise ship really is a piece of garbage with holes in it. But maybe right now the holes are just all covered up with duct tape and stuff like that. So the journey continues. But the thing that's the problem, and what we've learned about, is we have all these icebergs out here. And it's only a matter of time before the price hits the iceberg, as we learned about in the penny stock cycle. When that's going to happen, who knows? What iceberg it's going to hit, who knows? But this Kool-Aid is going to get diluted, and an iceberg is going to show up, and you're going to get hit. Now, what we want to do, and terms that you want to do and avoid, the first term, sell into strength. What is selling into strength? If you've been in my chat room, you've heard me say this all the time. Selling into strength within the context of this analogy is, if you're on the cruise ship and people are calling you crazy and giving you weird looks because you're getting on a lifeboat when everything is perfect, be confident you are exiting at the right time. So when everybody's partying, there's not an iceberg in sight. It's just the perfect environment, but yet they see you getting on a lifeboat, going down in the water and sailing away on your lifeboat. People are like, is this person stupid? Why are they selling right now? You're doing it right. Don't worry. Yeah, it might be a little too soon, but you want to be too soon. You want the price to go up a little bit. If the price goes up after you sell, you're doing it right. And when I say goes up, I mean, if you sell and then it immediately keeps going up, you are selling into strength. You're hopping on that lifeboat when everybody else thinks the party's going on and everybody else is having a great time and thinks everything's perfect. You're doing it right. Don't let the craziness, don't let message board comments or social media comments or anything like that. The people that are telling you're an idiot. Why are you hopping on this lifeboat? Look how beautiful the sun's out. There's nothing in the sea. The waters are calm. I mean, we're having a great party. Didn't you have the buffet? Did you listen to the entertainment? It's great. Why would you be getting on a lifeboat now and sailing away when everything is going so well? That's what you want. You want people to think you're crazy. When people think you're crazy, you're getting out at the right time. You're exiting the cruise ship at the right time. Because when it's too late is where chase the bid comes in, and that's what we want to avoid. When things when the iceberg is hit and the boat starts to sink, you're going to have a mass rush to those lifeboats, and the mass rush of the lifeboats is people trying to sell. And going back to the whole liquidity thing, depending on the liquidity situation, step 10 happens and people are chasing the bid. They keep trying to sell, but then all those options at that price are gone. They put in a new order. All those options at that price are gone, aka the seats are disappearing from the lifeboat. They put in another order, even lower. But because too many other people are rushing to put in orders and have already beat them to that price level, they miss out on that. And they're literally chasing the price all the way down, trying to get out because things are no longer good. The ship is sinking. The iceberg has already been hit. And now they're very jealous of those people because the price that they sold out at is now below what they're trying to get out. So yeah, sure, they had shares when it was at a much higher value, but because the ship is starting to sink and everybody's selling all at once, the prices dropped so far and so fast that now the price that they're going to be selling their shares for is actually less than what even they laughed at and called the crazy people, at that level that those people are able to sell their shares for. So again, we want to sell into strength. If you sell and then the price immediately keeps going up after you have sold, you did it right. You sold into strength, you hopped on that lifeboat and got out. If you've never been in a lack of seats available at the lifeboat, meaning if you've never chased the bid, trust me, you don't want to be there. It is not fun. Maybe you have been there, and I'm sure I can speak for you when you say you never want to be there again. So it's all about, in the world of penny stocks, selling when things are good, selling into strength, and when you get the look of you're an idiot or you're crazy, why are you leaving the party right now? You're doing it right, and that's the best way to look at selling penny stocks. So if you sell too soon, don't worry about it. As long as you're locking in profits, any profit in the world of penny stocks is something to be cherished. And if you do that over and over again, keep exiting the cruise ship, get those crazy looks, have people continually tell you're an idiot because you're leaving too soon, then you're doing it the right way and you're going to be around for a very long time. So these are the concepts, learn them, apply them, and just get your mind around them. That lots of gibberish going around out there in the penny stock world, but understanding these concepts are what's going to keep you in the game and surviving the wilderness. Well, I hope you enjoyed, and if you did, please do a couple things for me. Hit that like button and leave a comment below, even if you just say thanks. Also, go to claytrader.com/team, and if you want to join my private community that's got all sorts of added benefits, you can learn more at that link, then please join. I'd love to have you. It's very cost effective, and like I said, if you want to surround yourself with other quality, like-minded people such as yourself, then I hope you give it some consideration. But again, if you enjoyed the video, hit that like button and leave a comment down below.